It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching the China Show. I'm Annabelle Droulers with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Let's get to your top stories today. President Trump is seeking to delay his meeting with President Xi Jinping, saying he needs to stay in Washington to oversee the war in Iran.
And on that, Asian stocks are rising, oil prices stabilizing as the U.S. calls on allies to help reopen the Strait of Hormuz. The region's chip stocks getting a boost from Nvidia's $1 trillion sales forecast.
Also ahead, the RBA is set for a second straight rate hike as elevated energy costs and supply chain disruptions reignite inflation.
And Alibaba planning a major revamp of its sprawling AI ventures to focus on making sure it's able to monetize its big investments.
Right. Welcome to the program. Lots of things to get into when we look at markets today. So you have obviously the two major themes, which is, of course, the ongoing war in the Middle East. And, of course, that has now gone into has now directly affected, in fact, the upcoming potentially upcoming summit now between the Americans and the Chinese. And our understanding is, of course, President Trump has said that he has requested for that to be pushed back. Of course, there are, I guess, other things on his mind that he needs to attend to. The other thing, of course, that markets are trying to digest as well, and could be the positive offset, is the Nvidia story overnight. We know the $1 trillion figure, but it's also around the product launches, not just from Nvidia, but how it affects that entire ecosystem into where we are in the Asia Pacific.
Yeah, that's right. I mean, it's a huge sales projection, of course, $1 trillion in sales through the end of 2027. But yes, that deeper push that we're seeing into CPUs, looking at what kind of semiconductors it can introduce as well, because it acquired the startup Grok. So, lots of different threads there. But I think kind of going back to that bigger macro picture, really, it does come back down to what we're seeing in Iran in particular. And just to finish off that point as well, that delay that we've got to the summit, I do think it's interesting when you did actually have officials, US and Chinese officials, meeting in Paris just to hash out the details. But we've already got this delay. I do think, though, is it a delay that Beijing maybe wants to see?
Well, maybe it was part of the conversations on the weekend, hashing out the agenda, but also maybe a bit of a nudge. We'll see, of course, whether or not that was, of course, the intention and design. Now, just looking at that, too, when we look at markets, right, so a couple of things. What we tend to see over the last 2 weeks or so is you have periodic rallies when oil is just up by this amount on your screen. So you're getting the good themes coming through these windows, transitory windows, when you have oil somewhat behaving itself. So you have the tech play coming through as well, 2.6% to the upside. Let's please have a look at where we are as far as the other big stories are concerned, right? So we talked about monetary policy, inflation, and in the form of the RBA, actually, right? So majority of economists think they will hike today. It's not a small minority that think they'll hold. 65%, so it's two-thirds probability in the rates market. So either way, someone is going to get disappointed. Either way, we'll likely see some form of reaction here. The dollar is steadying following declines we had on Monday. Equity markets, let's have a look at that, please. Nikkei, Kospi. It's also worth pointing out that the tech rally is more pronounced in Korea and in Taiwan, which is coming online. Volumes are not where you would expect them to be. So really low conviction when you look at the price rally today. S&P futures are, in fact, now down. We're still trying to also figure out the developments in the Middle East, where you have the UAE, of course. We understand that the airspace is still closed. Non-exciting open by the looks of futures right now when you look at China. It's the yield curve that you want to pay attention to, the spread between, depends, right, 10 and 30, or in this case, it's the 1 and 30, which is effectively now steepest in several months, in some cases in several years. But yes, more on that in a moment.
Yeah, in the meantime, though, let's get back to our top stories. That is, of course, what's happening with the US and China, what's happening as well, the latest in Iran. But we'll bring in our Chief North Asia correspondent, Stephen Engel, our politics editor as well, Laura Davidson, joining us from Tokyo this morning. But, Steve, I think we can get started with you because I mean, you've been saying for a while that you thought maybe this might not actually go ahead on the planned schedule, at least, between the US and China. So what exactly is happening here?
I have to keep my opinion away from the facts that we know. And the facts we know right now, obviously, are that Donald Trump is saying, I think I have other priorities right now. And Scott Bessent is talking about the logistics do not line up for a summit in Beijing, given the concerns of the war and also just the size and scope of such a high-profile meeting in Beijing at the end of this month on March 31st and into April. My opinion, to a certain degree, has always been, why would Beijing welcome Donald Trump at this time to Beijing to allow him to essentially bang the drums of trying to get support for this war, which already, the Chinese Foreign Minister Wong has called totally unacceptable, and they have made a number of different comments about, basically denigrating the aims in this war in Iran. In fact, Global Times dismissed Trump's call for China's help with the Strait of Hormuz in their paper yesterday. Of course, this is a state media, as an attempt to spread the risk of a war that Washington started and can't finish. So state media is saying what a lot of people, I assume, in Beijing are thinking right now. Now is not the right time to have a summit between these two gentlemen. So they're going to be pushing it off.
What specific confirmation should we be expecting or should we be watching, whether or not to actually put finality to this? I want to say speculation because now we know one side has asked for it.
Yeah, so Donald Trump is requesting a delay. I would imagine Beijing could possibly respond when the day opens in Beijing right now. It's 9:07. Yeah. There will be a foreign ministry briefing later in the afternoon. We could get comments or we could get silence. I'm not quite sure. But again, I think there's some narration games going on. Scott Bessent, again, is saying he rejected speculation that Trump was threatening to delay this trip to China to help reopen the Strait of Hormuz. That's not the narrative that they want to push. He calls it a false narrative. So right now it is simply in the hands. The White House is trying to basically convey that this is a logistics problem. And we'll have to see what Beijing, I'm sure, does not want to have this summit happen with the backdrop of the war.
Yeah. And, so clearly we've connected the two. My question is, to your point, right? It's a logistics issue. There are other things that are occupying, of course, the White House. There was a narrative that emerged yesterday, which was this was simply Donald Trump putting pressure on the Chinese to help him out in the fire he started in the Middle East when it comes to the Strait of Hormuz.
Right.
What's happened with that view at this point in time?
Well, that's what the Global Times was responding to, and that's what Scott Bessent was responding to, right?
Okay.
So that's not the narrative that Donald Trump or the White House, is trying to convey right now.
Okay.
They're trying to simply say it's not the right time, obviously. Look, we've been reporting as well. I was in Beijing for the last couple of weeks. We were reporting that sources were essentially saying Beijing wanted to delay this from the start. They wanted maybe late April or even later because the ducks are not in a row for the deliverables for China or the United States, because they were complaining about a lack of preparation and consultation on what will the deliverables be. Now, again, I'm speculating here, but if Beijing is sitting there on the stage with Donald Trump and Donald Trump starts going off on tangents about the war and this and that, that is not a deliverable the Chinese necessarily want.
Yeah, exactly. All right, Steve, we'll bring Laura in now because, Laura, as Steve was saying there around China, of course, not wanting to get involved in this conflict, it seems like many other countries don't as well, even though President Trump is still reiterating his call for other nations to step in.
Yes, Trump is really out there on an island right now. He has, sort of berated allies, calling out NATO in particular, calling out China, asking for help securing the Strait of Hormuz, asking for military support. He mentioned the UK Prime Minister Starmer yesterday when he was talking to reporters, saying that Starmer was hesitant to give support and said that he told him, look, the U.S. will remember if you don't back us in this war. So Trump is getting increasingly angry at what he sees as allies not coming to the U.S.'s defense. Of course, Trump didn't do anything to build any support for this ahead of the attack, or really even after the attack started, on what the objective is here, what he's looking for. Trump is sort of in both a geopolitical as well as a economic crisis of his own making here, as he tries to figure out both how to navigate the war, the path forward here, as well as what to do with energy prices. which are a big domestic political issue for him. This whole delay also acknowledges that this war is not going to end soon. The potential delay of the Trump-Xi summit, the White House is essentially acknowledging they see this going on for weeks, if not significantly longer.
Yeah, Laura, just to also mention, we have an update now as it pertains to UAE and the airspace. And we understand, of course, they have now said that air navigation has returned to normal across the airspace. Now, of course, from experience this time yesterday, we know that could change just like that. But that is, of course, encouraging news. Laura, get us up to speed, please, on... So I woke up this morning, flurry of headlines of attacks, missiles, interceptions. What is the latest as far as that's concerned?
Yeah, we've seen a barrage of attacks from Iran to U.S. allies in the Gulf region there. This is part of the strategy of Iran here, is right. They can't, they don't really have the capability to attack the U.S. directly. Of course, there are bases and military outposts in the region, but they can put pressure on U.S.'s allies there, continuing to make life very difficult for people, where they have to close airspace. People are unable to go to work and school. Of course, energy prices are rising. There's a lot that Iran can do, and their hope is that then those allies then put pressure on the U.S. saying, look, we can't keep up this war. We don't have the weapons to do it. This is unsustainable. This is making life for our citizens really, really painful. In some ways, Iran already has Europe as well as, other allies, U.S. allies like Japan. Takaichi's headed to the White House this week doing that already. They're really not coming to Trump's defense, even as he asks for additional help here. So Iran has some just structural advantages on its side of they're fighting a war that no one except for the U.S. and Israel really want to be in.
It's interesting that President Trump, even though he is so preoccupied with what's going on in Iran, has still started to open the door to this front in Cuba. Why exactly is he choosing this moment, do you think?
This is a really interesting moment. This is something that has been on particularly Secretary of State Marco Rubio's radar for a long time. Trump even weeks ago said that Rubio was engaging with Cuba. But this is, Trump acknowledged yesterday that he wanted to do Iran first, but then Cuba. That tone, though, just over the past, 12, 18 hours has changed, with Trump saying that it would be an honor to take Cuba, musing about whether Cuba would fall or if the U.S. would have to, use some sort of force to take it over. Trump, is clearly looking for, a way to kind of get a quick and easy win, as Iran has not gone as expected. Trump at the beginning of the war said that he expected this to play out in Iran like it did in Venezuela. The U.S. could go in quickly, have a pretty simple and targeted military operation, depose a leader, and then have a very friendly to the U.S. regime come in. Obviously, that's not what's played out on the ground. It looks like it could be a very difficult and long road ahead to any sort of resolution to the conflict in Iran. Trump, kind of seeing the writing on the wall there is looking for what strategically could he do to change the narrative, show strength on the world stage, as well as have a priority that's a key priority for one of the members of his cabinet.
All right, Laura, thanks very much for joining us this morning. That was our politics editor, Laura Davidson, there, as well as our chief North Asia correspondent, Stephen Engel. But coming up, we're going to shift our attention to Alibaba. This is big news, of course, setting up the new business unit to bring its AI services and development endeavors, under a single umbrella. We'll be watching for the market reaction to that as well, but we'll have more ahead as we count down to the open of trade in Shanghai, Shenzhen and Hong Kong. You're watching The China Show. You're watching The China Show this morning. We're counting down to the open of trade, about 15 minutes away. You can see the yuan reference rate at the bottom of your screen there. So 60.8961, not too far off the estimate, actually. But some of the things we're watching in the session today. So you've got, of course, the US-China summit updates. We've got the delay. How exactly is Beijing likely to respond to that? But Stephen Engel was just talking to us, saying this is probably something they're really going to welcome, just based on how it was actually shaping up. Some of the sectors to track, of course, very much Iran related. So you've got oils, metals, chips, batteries, all of those in focus. Are you starting to see any sort of supply chain disruptions as well? Earnings are still to track. We've got actually the Leapmotor, CEO joining us in the next hour. So that'll be an interesting conversation with Michael Wu, of course, but some other companies as well we're tracking there include CSPC. John Lee briefing, that's a regular one that happens in the session. But, Dave, you're also watching that steeper yield curve.
Yeah, and some of the inflationary pressures that are being priced into the curve, right? I think you had a really big pop in the 30-year yesterday. It's steepening certainly, and something to watch as we move into the thick of March. And also just to mention too, when you look at everything else on the earnings front as well, right? So CATL actually did, of course, talk about that last week, but that's also the battery story and the massive pop in the stock yesterday. And to talk about 1, 2, 3, the fifth element on your screens, Min Min Lo is here with us and said to discuss this. Why are we talking about Alibaba today?
So, according to a internal memo that Bloomberg has seen, Alibaba is going through a revamp. It's trying to bring all its AI products and services under a single umbrella that is going to be headed by the CEO, Eddie Wu. So this would bring the flagship Quen model and its consumer-facing app, as well as TikTok, which is a Slack-like app for enterprises, the AI smart glasses. All of that will come under a single umbrella known as Alibaba Token Hub. So the title itself already signals that there is a lot of focus on monetization, right? A token is the computing unit that Alibaba would charge its consumers. And this is also coming at a critical time because Alibaba has seen a very high-profile departure recently. Its key architect behind the Quen model had left, and that really created a lot of market jitters. We saw the stock falling, and there was a lot of speculation about whether or not more Alibaba employees would left. The company has been trying to quell those speculations, but this is the first sort of articulation of their new AI strategy after this high-profile departure.
Yeah, that's Justin Lin, of course, and certainly someone who was seen really as the star research lead for Quen in particular. We've got the earnings coming up later this week. How do you think then that sort of AI monetization play is likely to factor into the results?
So we will definitely want to look out for management comments about this overhaul, whether it would come with more AI investment, for example. But our Bloomberg intelligence analysts were saying that this could lead to quicker, better coordination between the different AI teams, faster product iteration as well. And we understand from sources, people familiar with the company, saying that the company is looking to launch as soon as this week its own agentic AI tool for enterprises that runs on its Quen model. So this really capitalizes on that enthusiasm around OpenClaw. Eventually, they will likely want to integrate that with their existing apps like Taobao and Alipay as well. And again, this is something that analysts have said could lead to higher conversion rate. It could allow Alibaba to roll out more targeted perks and maybe roll back discounts without losing that user engagement.
All right, Min Min, thanks so much for joining us. That was our China correspondent, Min Min Lo there. And just taking a quick look at what's happening with semiconductor names this morning, because I think, of course, we've just got that reaction to Nvidia's GTC event. Very big focus on the trillion-dollar product forecast, essentially. It is their biggest flagship event of the year. But seeing all these companies moving high, I think Samsung is really the one to watch, just given they made that announcement around HBM4E in particular.
Yeah, we were talking about this when we saw the headline, right? And in terms of, so it was well flagged anyway, HBM4. It's the reason why, of course, people have been so focused on memory. But there's a reminder again that things are moving quite progressively when it comes to the story. And I think the Nvidia story too. One of the things that caught my eye was the chip for space. And data centers.
So Nvidia is essentially saying that it's designed architecture now that can be specifically used for essentially data centers when they do head into space. This is very much a frontier technology, but one that's attracting a lot of different investor interest. I think just to sort of recap on that Samsung story in particular. So HBM4 is going into mass development now, but HBM4E is the sort of next step, the sort of intermediate step. And I think as well, what else Samsung did that was interesting at the event was unveil some new technology for packaging. And this is interesting. So this is hybrid copper bonding. And what they're saying is that you can have up to 16 layers. Right now you're around 12 for HBM4. So 16, you're essentially getting more power. Yeah.
I pretended I understood that. That's why we have Belle, of course, to help us explain that too. Let's get more, in fact, on that unveiling, of course, that range of new products at the company's big product event. It's an annual exercise. The CEO, Jensen Huang, also predicting AI processors will generate, we talked about that, $1 trillion in sales through 2027. Our colleague Ed Ludlow has the details.
It's $1 trillion of sales, but between 2025 and 2027. And unlike the forecast we got in October from the DC edition of GTC, it lacks some qualifiers and details. So back in October, when they gave us this $500 billion figure, it was only for Blackwell and Rubin systems. It was for 5 fiscal quarters through the end of calendar year 26. And then we found out later that it also included networking sales. We don't have that level of detail, granularity about the 1 trillion other than it is 2025 to 2027. But what it does do is push Nvidia's visibility for its systems further into the decade through 2027. It's a cumulative figure. Elsewhere, we got updates on Grok with a Q, on the inference side, and how its technology is being integrated into future systems starting in the second half of this year. We are going to get specific designs for space-based data center, an area that Nvidia is now admittedly pushing into. And they want to push deeper into CPU, right? That's been Intel's stronghold, but they see value in going to that and said that it was addressable market worth multiple billions of dollars to them. Beyond that, this was classic GTC. It was the AI Super Bowl that it always is. And Jensen Huang, in a 2.5-hour presentation, talked about how Nvidia is a necessity at every single layer of the 5-layer AI cake that he often talks about. This is Ed Ludlow for Bloomberg News in San Francisco.
Yeah, there we go. About 6 minutes, 30 seconds to the opening bell. We are called higher now, 0.4% on the Hang Seng Index. Some of that might have to do with Alibaba coming up on your screens very shortly. Yeah, more on the trading day ahead. This is Bloomberg. Right. Welcome back. Just about under 5 minutes to the opening bell. On your screens, you have dollar China. Shortly, you'll see the pre-markets and the indications as we go into the Tuesday session. Just a couple of things to note here before we head into that. The Ministry of Finance out with a statement here talking about a few things. Local government financing platforms will be reformed. They'll continue to issue green sovereign bonds. And also China will accelerate tech self-reliance. We'll unpack that even further once we get more details and go through it. It's a fairly long statement, in fact, when you look at the Chinese version of things. CSI 300, 0.3% to the upside. This is broadly in line with the benchmark on the Asia Pacific. You are getting, of course, the outperformance coming through in Korea. Anyway, the opening bell is coming up next. Welcome back. You're watching The China Show, counting down to the open of markets. A few things on deck today. A ton of earnings coming through, earnings reaction. Leapmotor is one to watch. We'll have the co-president joining us in the next hour. Alibaba's in focus given that overhaul that they talked about. There's an RBA rate decision. Majority think they'll hike. There is a decent minority that say they will hold. So either way, that's going to be newsworthy, and we're going to see market reaction. Plus, of course, everything that's still taking place on the in the Middle East and how that's affecting, should we still call it a potential summit? A summit that's taking place? Or is that going to be
there's always the potential for a summit. It's just when it's going to take place.
That's true, yes. Depends how long your time frame is.
Exactly. Just push out the time frame. It does seem like this meeting between Presidents Trump and Xi has been pushed back. It was slated, or what had been planned for was for it to kickstart at the end of this month and go into early April. But yes, that's what we've been hearing. Or President Trump is saying that he's essentially asked China to delay that just because he's so focused right now on what's happening in Iran. And that's certainly the main thing that investors are reacting to in the session today. I think it's really interesting because we're seeing Asian equities that are generally higher. You've got Chinese equities sort of taking their cues from that as well. But it's all around this expectation you're going to see more oil passing through the Strait of Hormuz, even though overnight you've actually seen Iran striking new targets across the Persian Gulf and hitting a key UAE oil hub. So Yes, I mean, certainly a very much a live situation, one that's developing very quickly. Some of the stocks that we're tracking today, we're keeping a close eye on what's happening with the chip maker space in particular, given we had that Nvidia GTC event taking place and the company forecasting very ambitious sales targets over the next couple of years. But we'll leave that there. Let's switch on and take a look at what's happening in Hong Kong in particular, because there's a couple of different stocks that we're tracking. One of those, of course, is Alibaba today. We were speaking with Min Min just a few moments ago, but you're seeing that stock there. Really one of the big leaders so far for the tech story today, but you are up more than 2% this morning. They're planning a major revamp around how they essentially run their AI operations and very much bringing that development side into the monetization side and trying to, again, get better ROI out of the investments that they're making. As we said, chip stocks are a major watch for us today. We had that Nvidia event. We can just look at how some of them are performing in the session so far. A little bit mixed. I think the story around Huawei is really interesting because yesterday we actually had a huge run-up in that name. But Huawei is an interesting one because we actually got this speculation right now that they're actually moving towards 7-nanometer technology. Now, 7-nanometer SMIC, you can see there the third one down, is the other major foundry in China. They can already produce at that level, but Huawei essentially coming into line. Earnings, still the big watch. Leapmotor, of course, you mentioned we've got that interview with the co-president, Michael Wu, coming up in the next hour. But strong numbers out of Leapmotor. They've got very ambitious targets, 1 million vehicle sales for this year. And the company is, well, managing to post its first profit. So you are a little bit higher so far in the session.
Yeah. Okay. So earnings, I'm just going to recap for viewers in case you missed that. So the connection between the war in Iran and in the Middle East has really now seeped into this summit that we were all counting down to from, of course, that initial meeting back in November. In case you missed that, that seems like an entire universe ago. In Korea, leading into, of course, what should we still call that? Still is a planned summit between the two presidents, but we understand now that it seems that the U.S. president has then asked for that to be pushed back, given other priorities are, of course, taking up his mind space. And apart from that, I think we talked about this with Steve too earlier on. They did meet top officials in Paris over the weekend to iron out potential agenda, but maybe also to just get along the same lines around the fact that might be the best idea to just maybe delay. There we go. Thank you so much. Delay the summit because of what's taking place there. Now, does that affect relations? Anything that we were to expect from that meeting? Economic ties, tariffs, reshoring, those sort of themes. Let's talk about how that affects markets, right? So Eric Wong is with us here on set, CIO of Stillpoint Investments, a hedge fund manager that specializes in Greater China equities. Very nice to see you.
Nice to see you all. Thank you for having me.
If we don't get this meeting take place, is that how do you think that affects the trajectory of markets and everything that we were hoping to get from that meeting, or is it almost a nothing burger at this point?
I think the signs that we've seen from both sides seem to point to the fact that planning for that meeting continues to take place.
Okay.
And so at this point, it looks more like a delay. Secretary Besson had said that it's primarily due to logistical planning purposes, right? But I think the larger agenda of reshoring of manufacturing is something that is one of the biggest shifts taking place in global industry today. And that regardless of whether this meeting gets delayed or pushed back further, is a larger trend that will continue. Companies are gradually moving their manufacturing bases closer to where demand actually is.
Right.
Now, the ironic part is that this trend is benefiting precision manufacturers located in China. These are companies that are producing equipment, precision components that U.S. manufacturers need. And many of these companies are actually high-end industrial companies listed here in Hong Kong.
Yeah, and that's a good point to bring up in terms of the timing. I mean, even so, I think immaculate, because people are now, our attention is now focused on other parts of the world, and we tend to be ignoring these things. So talk to us about, when you say reshoring, is that reshoring into the United States, to be clear, and what signs are you seeing for that to be somewhat more predictable trend?
Well, starting with the first trade war, in Trump's first term, we began to see this trend of reshoring of manufacturing. But I think with the onset of tariffs in April of last year, the pace of that reshoring has accelerated. So at the beginning, it was a local for local manufacturing trend that we were seeing happening globally. What we've seen in the last 12 to 18 months is that reshoring in the United States is something that has been driving a lot of manufacturing capacity expansion in the U.S. And on the face of it, it looks like that might be difficult of a situation for Chinese manufacturers to deal with. But
on the surface, it does look like that, yes.
But what's interesting is that there are a cluster of companies that are actually enabling this expansion of manufacturing capacity in the United States, as well as other parts of the world. And we think that those companies stand to benefit, despite the fact that geopolitics, tariffs, China plus one strategies seem to make it such that they are dampening the impact and the scale of Chinese manufacturing going global.
And how, well, let me ask that question later, but fair disclosure, can you talk about these companies and do you own the stocks?
Sure. One of these companies is Morimatsu International.
Okay.
It is a builder of modular factories that can be shipped and assembled anywhere in the world. So as industries from pharmaceuticals to new energy materials expand their manufacturing capacity in the United States, that growth then flows through to companies like Morimatsu. And so this is a company where, despite that growth, it continues to trade at a 10 times PE multiple with a very healthy free cash flow yield while delivering EPS growth in the healthy double-digit range.
Okay.
What efforts, though, is Morimatsu making to, I guess, decouple its China operations from its US operations? There are some companies that I've spoken to in China that want to be able to expand into the US, but they're going to quite extreme measures, I would say, to really ring fence, I guess, their different operations.
I think it varies from industry to industry. For Morimatsu specifically, there are small scale operations outside of China in Malaysia. That said, its production base is primarily in China still, and part of the reason is that despite the decoupling that you're mentioning, Annabelle, these customers of Morimatsu are actually willing to take on the cost of the large part of those tariffs that have been levied onto Chinese exports, because the cost-saving opportunity of these modular factories are so large, not only in terms of cost, but also in terms of time to completion of building out that manufacturing capacity.
And what gives you the confidence that they can remain immune from political winds?
I think this is a company that actually can take advantage of those political winds, right? So aside from just beyond producing just products, China is actually gradually exporting the manufacturing ecosystem of China to other parts of the world at this moment. And these modular factories are actually an embodiment of that. And so we think that in this situation, in these very volatile global geopolitical headlines, this is a company that is very well positioned to be able to take advantage of that.
Yeah, and I guess, the part of the question was to what extent the Made in China brand becomes an asset and not liability in this case, I guess, is what I want to get to.
I think what we're gradually seeing is that Made in China is becoming less of a liability and more of an asset over time, because the quality of the products, as well as the cost efficiency, actually outweigh some of the costs that have been placed onto the ecosystem from these tariffs, as well as the uncertainty of global trade. And I think companies are adapting by shifting their supply chain to other parts of the world, and Morimatsu is well positioned to be able to take advantage of that trend.
Yeah, you certainly see that trend, I think, of manufacturing China for China, establish a base usually in Southeast Asia for rest of world, essentially. On this company in particular, what do you think is the upside potential here? How much do you think it's undervalued right now?
We think it's, the upside, it could probably trade in the mid-teens. From where
it's
it is
10
currently.
right now, right? As you mentioned,
it's a 10 or it's a 7 or 8 right now. It could have the opportunity to trade in the mid-teens.
Okay. What other trends are we seeing along these lines too?
Another company that is an example of this is actually Impro Precision. What they do is they export precision components serving U.S. manufacturers that sell into downstream industries, including automobiles as well as aerospace and engines. And what's interesting about both Impro as well as Morimatsu is that they have the opportunity to expand into the data center supply chain space, one that y'all have been covering through the QN as well as the Nvidia discussions earlier today. But we think that that new growth opportunity can actually allow these stocks to re-rate in terms of growth as well as multiple.
All right, Eric, thanks so much for joining us this morning. That was Eric Wong there, CIO of Stillpoint Investments. And coming up, we're going to be looking at what has been quite an acute issue across Asia. Private bankers scrambling to contain client anxiety.
Oh, no. Oh, no.
Well, yeah, I mean, pressure is rippling through that $1.8 trillion market. We'll get more details on that ahead. This is Bloomberg.
All right, private credits, and is that now affecting public credits? I wouldn't say it's a stretch. What we've seen is public credit spreads have widened. There's also, of course, oil prices moving to the upside, so that's increasing recession risks moving forward, and that tends to widen risks. And the fact that we're coming from multi-year lows doesn't help. But the fact is you are getting a lot more premium being built in the credit markets, and then you add the private credit worries, and then you have all these headlines coming through. So you have, of course, this widening of spreads, and I think Morgan Stanley now puts that at about 8% as these advances in AI specifically continue to disrupt the software industry, I think is what the Morgan Stanley note was specifically on here, Belle.
Yeah, that's right. Just the amount of exposure to it from private credit that, of course, has been really attracted by those regular high returns over multiple years. So it's really piled into direct lending on that front. But let's bring that back to Asia now, because I think it's also another story that the wealth bankers are really scrambling in the region to try and contain client anxiety. And how much is that sort of based in reality and how much is that based in fear, I think, is the big question. But let's get more with our Asia credit reporter, Trista Shinyi-Lo, joining us this morning. So, Trista, what are you hearing from the people that you're speaking to, your sources?
Yeah, so in recent years, global asset managers, including Blackstone, Apollo, KKR, they have raised billions of dollars for this private credit products via this wealth channel. And this global asset manager usually distribute this product via private banks. And, retail clients in APAC actually currently hold over $48 billion for this asset class. And that number are projected to rise to over $74 billion by 2028. So that's one of the reasons why, Asian private bankers in recent weeks have been quite busy. They are, keep receiving calls from their clients, ask them to explain what's going on right now, and even need to fulfill their clients, redemption requests. And during our reporting, we found one thing is really interesting is that wealthy clients, this part of world, are especially sensitive to headlines because for many of them, the latest jitter seems like deja vu. It's sounds like familiar with them because many of them have been burned by, the wipeout of the so-called tier one notes during the Credit Suisse 2023 rescue, and more recently, those Chinese developers, high yield bonds default. So for them, right now, the first instinct for them is to react fast, to play it safe, to redeem first.
Yeah, and I think we're past the point when don't worry doesn't go as far as it usually does to calm investor fears, right? So what are asset managers doing on top of saying don't worry?
Yeah, I think asset managers are working hard in recent weeks trying to hold out those, in-person events to explain to private bankers what's going on, what's their underlying asset under these portfolios. Basically, the key message they want to deliver is still don't panic because, for example, the gating mechanism, the design of the gating mechanism is to protect the long-term return because, if everyone rush to redeem the assets, and then the asset manager might need to fire sell their asset and in cheap price, and then in longer term it will hurt the return and it will maybe prompt more exit.
Yeah, that's a cycle you don't want to get into as well. When the bank says your ATM limit has been shrunk, they haven't closed the ATM, right, or the bank, but they've shrunk the limit. Trista, thank you so much. Trista Shinyi-Lo there, Asia Credit Reporter. Something to watch, of course. The reality is somewhere in the middle of just panic and nothing to see here. And some other corporate news we're seeing this morning, looking at shares of Bright Smart Securities with the Ant Group winning regulatory approval there to complete its purchase of the Hong Kong-listed brokerage. According to an exchange filing, Ant completed reporting procedures with the relevant authorities required for high-value, non-sensitive investment projects. Now, the deal is expected to close on March 30. Chinese electric car maker Leapmotor has posted its first annual profit on strong vehicle sales as it expands its partnership with Stellantis. In a filing, Leapmotor says it's actively exploring cooperation on cars and components to navigate European regulations and potential tariff exemptions. Leapmotor's net income for 2025 was $78 million, and the firm has set a target of 1 million vehicle sales this year.
Yeah, and you're seeing investors really liking these numbers because that stock is up more than 4% as we get into morning trading. Big interview, of course, coming up with Leapmotor in the next hour. We'll be speaking with Michael Wu, co-president. That conversation just ahead. This is Bloomberg. Well, China's facing a key test as the nation's AI boom reshapes industries while putting millions of jobs at risk. Analysts are warning that up to 142 million urban jobs could vanish by 2049. That's due to rapid AI-driven automation.
Yep, our Min Lo has a lot more details.
That almost looks like me, but it's not. It's an AI-generated video based on a single screenshot. Tools from Alibaba, Tencent, Kuaishou are making AI video generation accessible to millions, sometimes for free.
Our company, I can't imagine without AI, how can we survive at the beginning? Without AI, I don't think our game can actually be done in 1 year.
It's brought huge productivity gains for this game developer, but also raised alarms in the entertainment industry. Disney and Paramount have accused ByteDance of IP infringement after its video generator produced near cinematic scenes from just a text prompt. The fear is that AI could replace not just mundane tasks, but jobs across creative industries.
The painting, if we use like labor works, it's like 2,000 to 4,000 for one piece. But with AI, we only use like probably 2 RMB for one piece.
For policymakers, the challenge is balancing growth.
We will nurture emerging industries and industries of the future
With disruption.
The rapid development of AI is having a profound impact on employment.
The China Economic Journal projects that more than 30% of urban jobs in China could be lost to AI by 2049. That's 142 million jobs. That's a scenario that could threaten social stability. Beijing is aiming to create another 12 million jobs this year, with just as many graduates set to enter an already slack labor market.
In finance and IT, if there weren't for this kind of regulatory barriers, about 30 to 40% of the job could have been lost right away. If you're thinking about the automation, AI replacement of junior roles is already happening massively in China.
That leaves Xi Jinping's government with a dilemma. China can't afford to fall behind in its tech race with the United States, but the implications of the tech revolution are far from clear.
If we let AI replace the jobs without taxing the AI appropriately, then it can really get to the core of the consumer economy. And we got to think about sort of tax policy that is targeted specifically at what is driving those job losses.
It will be in the regulatory framework at some point. I just don't see it as a choice yet, because we're at the very early stage of promoting the application of AI. So the gray area must be capped, actually by a very wide margin.
Last December, state media published a landmark arbitration case in Beijing that set some early guardrails. Dismissing an employee because of AI is illegal because it's a business decision for profit, not an uncontrollable event. That means companies must prioritize retraining and reassignment before dismissing an employee. But for now, all signs at the 2 sessions suggest the government is going all in on tech at the risk of leaving some people behind. Min Lo, Bloomberg News, Beijing.
Right. Just for a look at markets right now, about 23 minutes into the cash market session here. A couple of tech names. We're starting to start in Taiwan and some server names there. Obviously, you had the annual Nvidia product promo, an exercise there, and obviously affects a whole gamut of names across the Asia Pacific. And as you can see, it's really playing out. It's not just the $1 trillion sales number that's put out. They put some meat in the bones on what their plans are here.
Yeah, well, they've got a very big sales target, $1 trillion in revenue through 2027, making that deeper push into CPUs or central processing units. They're also introducing semiconductors, or they've introduced semiconductors that are made with technology acquired from the startup Grok. So it's a really big focus that we have on inference now. So essentially the deployment of AI through the ecosystem. But we're also taking a look at what else is happening with the automakers, because we're seeing some price hikes actually from the Chinese EV makers.
And, this is going to be interesting because when we tie together the tech story and Chinese EVs, and Leapmotor's coming up later, right? And one of the things I'm curious to hear from them is what they're seeing as far as cost inflation is concerned, right? So everything from memory, and I wonder how they are, if they are, of course, affected by the crunch we're seeing there. So that's something, I guess, if their PR is listening, there we go. That's the heads up for you. Not that, of course, that's a secret in the industry, but that's going to come up. Now, speaking of inference, what can we infer from the data yesterday? Chinese consumer rally is coming up on your screens, and PopMart, there we go, 4.4%, leading sportswear maker Meituan and Yum China all seeing some decent gains right now. Retail sales speed plus the data has also been fairly favorable. Before we just head to the break, an update of Jakarta, which comes online in the next hour. Want to watch? Plenty more ahead. This is Bloomberg.
Welcome back to the China Show, taking a look at the Hang Seng half an hour into the session. And we are moving modestly, actually not even modestly, we're moving to the upside today. It is tracking really what's happening in Asian equities, and it comes back down to this expectation. I do think it's interesting that you've got a lot of investors that seem to be thinking you're going to get more oil being able to pass through the Strait of Hormuz, even though you saw Iran stepping up its attacks overnight. But we are tracking this morning. John Lee, for instance, in Hong Kong this morning, giving his his weekly briefing, but talking about how Hong Kong plans to ensure energy supplies. Also speaking with airlines, we've been speaking about maybe oil surcharges being factored into cafe fares, for instance, but trying to stress reasonable prices. Of course, are the airlines actually listening?
Yeah, I mean, a glance at, don't take my word for it. Try and book a flight and just see what comes up. But I think it's also, I think Cathay had come out in recent days and said they are looking at increasing capacity just because of the Middle East as a hub currently is not as feasible. So direct flights to Europe, I think, are really where people are going. And that's why you have this rush to, and demand is pushing a prices
and they've actually hedged. They've got their hedging strategy in place, which a lot of carriers in Asia don't have.
Well, I think they learned a lesson. I think they had a really bad hedge a few years ago.
Which then led to... That's a very famous...
learn from your mistakes. Okay, so what are we seeing as far as equity markets go, right? So I think we've got, the painful analogy here is, we've somewhat gotten used to risk premiums being built in. So every time you get a window of opportunity when Brent doesn't act up, you get equity markets starting to move on price. It's also worth pointing out the volumes are not heavy today, so not a lot of people are convinced, of course, that, this is a window to buy into. 3% on Samsung. Speaking of oil at these levels, I think last we checked, 2.5%. We're considering this flat, given intraday swings of recent days have been, of course, in the order of about 5 or 6, if not 28% at one point, of course. I think it was 2 Mondays ago. Aussie assets coming up in focus. That goes into the oil story. Do we get a second rate hike from the RBA? The majority says yes. Swaps say yes, although there is still a chance that they do nothing, and of course that will move markets. Minority of economists do think, of course, there is a case to stand pat for now.
Yeah, that's right. But I think it's going to be a really interesting meeting to watch. And you've got some banks out there saying they can hike now and they can hike again. You know, it's you're in a tightening cycle, essentially. RBA caught wrong-footed, inflation moving back into target range, moving out of target range again, it seems.
That's right. It is worth pointing out that the hike conversation was, well before things kicked off, of course, in the Middle East already, right? So it was already a considered move there. Which is why I think when you flip the boards, but remember, 4.56% is the 3-year yield. That's about 70 basis points north of the cash rate. And that spread hasn't been that wide since the last hiking cycle back in 2022. So the markets have telegraphed this move to a large extent. 1.3% to the upside, should be reversing everything as of the close yesterday, which closed the opposite way. So yes, this window of rebound is taking place across equity markets right now. We also have a rate decision coming through out of Bank Indonesia later today.
All right, let's get more on the market activity now. Bring in our managing editor for Asia Equities, Liang Ting Tu, joining us from Singapore. So, yeah, it seems like there's a little bit of exuberance we're seeing across markets today, and lots of enthusiasm, it seems, in tech in particular.
Yeah, indeed. I think it's a day where people's attention got diverted to AI-related news once again. I guess there's also a bit of a fatigue on the heavy news flow from the Iran war. So yeah, I mean, a flurry of news. We saw Jensen Huang talking about 1 trillion chip revenue by 2027. We've also had news about OpenAI talking to form a $10 billion joint venture with private equity firms. And there is also Meta's big investment into cloud provider Nebius. So chip stocks are quite buoyant, as you guys said, leading up to this morning. And of course, Nvidia itself not really doing too well, giving up much of the gains that we saw during the U.S. trading day. It does show that much of the chip demand growth has been priced in already. But in Asia, just because all these chip giants have been sold off so much during the last few days, we're seeing a bigger rebound. And of course, if you guys want to talk about Tencent and Alibaba, there's plenty of optimism there as well.
Why don't we? Why is that?
Yeah, of course. Overnight we had a nice Bloomberg story about Alibaba revamping its tech unit, and you're seeing market reaction show that investors really like that. And of course, Tencent is also reporting earnings tomorrow. Baba earnings on Thursday. There's basically a big sort of catalyst forming for investors this week. It does seem like while Baba is outperforming today, there seems to be a view that is forming to show that, Tencent may actually pose a big challenge to Alibaba with this open cloud deployment, because Tencent can leverage its everything app WeChat. So if Tencent can really launch its WeChat native AI agent to help its 1 billion plus users to automate daily tasks, obviously that would mean a huge market share gain for Tencent. So that's why you're seeing month to date, Tencent's share performance is actually a lot better than Alibaba. So a lot to watch out for in this earnings season coming up.
Okay, lots to watch as we make our way into the thick of earnings when those two come out in the coming days. Liang Ting, thank you so much. Liang Ting, our managing editor for Asia Equities. Speaking of Asia Equities, price is doing this, 1.5% session highs, although volumes are about 20% lower than this time of the day. So just interpret that the way you want to. But yes, price is there, conviction maybe not so much. Okay. The other big story is potentially a postponement of this big summit taking place. Xi and Trump looks like it's in jeopardy for the latest. Let's bring in our Chief North Asia correspondent, Stephen Engle, here in Hong Kong with us to talk us through will it or won't it?
You're asking me my opinion? Yeah, I don't think it will go forward at this point. I think it will be an absolute face-saving move by both sides, because already Scott Bessent, the Treasury Secretary, is saying it's a false narrative if you're believing that Donald Trump is going to be postponing this because he doesn't get an answer from Xi Jinping on whether he's going to help, whether the Chinese are going to help, safe passage in the Strait of Hormuz, or even potentially send warships of their own, which I think is a bit of a long shot, to say the least. But again, if that summit does go ahead, what are the deliverables going to be for the two sides? It will potentially set up for a failure for both sides, and that's not what they want. They're supposed to be signing or at least cementing this truce and promoting some, as Scott or Jameson Greer talked about, this new economic mechanism to basically formalize trade relations and economic relations. That's what he talked about after the Paris meeting with He Lifeng. But all cards are off the table if Donald Trump's number one goal right now is to get his allies, and he included China, on board to help calm the situation in the Straits of Hormuz. If he is on camera with Xi Jinping in Beijing and he asks Xi, are you going to support the peace efforts in the Strait of Hormuz? What's Xi Jinping going to say? He's going to say no, probably. Or if he doesn't say anything, it's not a win for Donald Trump. So I think
that's not a situation.
It's not a situation.
You want to risk. Yeah.
Your handlers are not going to. Xi Jinping's handlers are not going to put him in that situation. And if Donald Trump is listening to his advisors, he's probably not going to put himself into that situation because it's a no-win situation.
Yeah, and I guess the fact that that's such concern that this would be the elephant in the room if not addressed directly also maybe underscores just how many deliverables haven't been agreed on just yet either. So you mentioned this Paris meeting and you have an idea of a trade mechanism, but what else was discussed there, and would you say any sort of progress was made in Paris as well?
Well, I think that the fact that they're talking and they're trying to reach what Jameson Greer called a sort of U.S.-China Board of Trade, as I said, this mechanism. And also the Vice Commerce Minister, Li Changgang, he kind of put it even more vaguely. He said the two sides discussed the idea of establishing a working group. Oh, boy, that gets you excited. A working group that would examine promoting cooperation mechanisms for bilateral trade investment. So they have a concept of a plan, of an idea, right? So, yes, they're moving the ball forward to kind of formalize that truce that was reached in December. But again, you're absolutely right, Annabelle. The elephant in the room is the war in the Middle East, where China has vast investments and vast interests, obviously, as they much of their oil imports have to pass through the Strait of Hormuz. That would overshadow everything else at this point, 2.5 weeks out from the planned summit.
Yeah.
It's not going to happen.
No.
Sorry, I go on record. It's not going to happen.
Yeah, I mean, 13 days away, and we haven't had give some context here if we could. I mean, you usually have a ton of low-level talks, mid-tier level talks. You get to high level just to iron out everything. But my understanding is we haven't had that. No. That runway.
Well, the last state visit by Trump to China was 2017. He sent his Secretary of State, Rex Tillerson. He sent his Commerce Secretary to China in the months leading up to it to build in those deliverables. This time, there's been none of that other than lower-level officials who are already in Beijing trying to lay the groundwork. But the fear from Beijing is that Donald Trump's spontaneity is going to ruin the planned, orchestrated deliverables of the pomp and circumstance, the pageantry of state visit. So what the risks for the risks for Xi Jinping, in my estimation, are much greater to having that scenario without the deliverables and the orchestration already put in place.
Fantastic. Steve, thank you so much. Stephen Engel, our Chief North Asia correspondent. As you just witnessed, there has, of course, events from Trump 1.0 tattooed in his mind there, and of course that conversation there. Okay, just to recap some of these lines, an ongoing briefing, weekly briefing. John Lee, Hong Kong Chief Executive, discussing two things relevant to, obviously given the global relevance of things. Number one is Hong Kong will be ensuring energy supply amidst what's going on with global energy prices. And alongside that is that they are in touch with the airlines to stress, to keep airfares within reason, which is, I guess, something which underscores, of course, the reality right now.
Yeah, all right, from airfares to going a bit back down to earth, because we're going to be speaking with Leapmotor, of course, coming up. It has just posted its first annual profit on strong vehicle sales. It's expanding its partnership as well with Stellantis. We'll be joined by the co-president, Michael Wu. That interview is exclusive and just coming up after this ad break. More ahead. This is Bloomberg. Taking a look at what's happening with Leapmotor this morning, that stock is actually continuing to climb in the session so far. Leapmotor, one of the major EV makers in China, just had their earnings out and actually posting their first annual profit. So they're seeing strong vehicle sales. They're also expanding their partnership with Stellantis.
Yeah, it's something that they are actively pursuing right now. And what specific form that will show up, of course, is, I guess, part of the broader conversation around the company's plans, especially when you talk about the overseas markets. Joining us exclusively now from Hangzhou is the co-president, Michael Wu. Michael, good morning from Hong Kong. Thank you for joining us, sir. Doubled your revenues, net profit, things on the surface did seem to go to plan. What surprised you the most when you look back at 2025?
Yes, good morning, David. In 2025, what I can say is we have steadily executed our strategy and business. So we are on track in what we said we wanted to achieve.
Okay, and then in terms of looking ahead then into this coming year, you've set quite an ambitious sales target. Talk us through that and also the likelihood of meeting it, because there are a number of headwinds that are facing EV companies still today.
Yes, in 2026, our goal is to achieve 1 million units of delivery and keeping our gross margin at 14 to 15% at that level while achieving significant profit. But the 26 planning is based on our solid performance in 2025, during which we achieved first year ever, full year profitability, delivered 596,000 units. And also we expanded our channels, both domestically and internationally. So building on that foundation in 2026, we're pretty optimistic in all aspects of our business: sales, channels, gross margin, profitability, overseas, development. Hopefully, we can achieve another solid year for 26.
Yeah, I'd really like to hear more from you across most of those metrics, and I understand, of course, it's 1 million is the sales target on a vehicle basis for this year. Could you maybe expound a little bit more? What have you projected in terms of the geographical breakdown of that 1 million?
Yeah, for the 1 million number, we hope to achieve that about 850,000 in China. And the rest of 100,000, 150,000 will be achieved overseas, mostly in the Europe for 26. Although we have 3 regions which will launch vehicles and achieve a growth of sales, including Asia Pacific and South America.
Yeah, so South America, I understand that Brazil is a particularly important market for you there, but also Chile, Argentina, Ecuador, Colombia. I mean, there's quite a few. Let's get back to Europe, though, because the partnership with Stellantis is particularly important in that market. So what exactly are you getting from that, and what are you giving back to Stellantis in turn? Where's the synergy, do you think?
Yes, in Europe, we have a great partner, Stellantis, and we're very well positioned. I'd say in business development on our side, we're one step ahead, among the competitors. Firstly, we've got a Leapmotor International, the JV, who has been handling the sales and also local productions and other services and logistical support for the post-sales services. So that's been very well positioned. And in addition to this, we're also talking to Stellantis Group in other collaboration projects to deepen our relationship, to find more growth opportunities for both of our companies.
Okay, and Michael, when do we hear the finality of that, in what final form that partnership will eventually become in your platform, of course, into that very important market of Europe, Michael?
Yeah, we're in multiple discussions with the group, with the Stellantis Group. We hope we can advance this discussion quickly and make it to fruition soon.
Are you concerned at all about geopolitics potentially factoring in or being having a bearing essentially on the talks? Because, I mean, the headline today is that the Trump-Xi summit has been postponed, but but certainly there's still lots of progress to be made on the relationship between Beijing and Washington.
Actually, the geopolitical environment is evolving. Some of them we kind of anticipated for, like in 2023 when we forged the partnership with Stellantis. If you look at some of the contemplated new European regulation directions, such as this IAA, Industrial Acceleration Act, in there are some discussion proposals to stipulate JVs to be formed between Chinese companies and the European companies, and etc. So in 2023, when we formed the Stellantis JV, we already got the 51% by Stellantis. We already got some of the structure set up. So in a way, today's involvement in the auto business in the Europe regulatory environment, we're pretty well positioned. We kind of saw this coming, a while ago. Obviously, you have other things going on in the world which is outside our control. So all we have to do is to find our best way to adapt to it.
Yeah, and I think the point you made there is that this is a formula that a Chinese car maker like yourself can leverage in terms of being able to largely hedge and shield itself from, unpredictable geopolitical headwinds, to have a partner, really, in what form. Michael, I just also want to ask you about the domestic market, and, we've had this conversation before around price trends and pricing. You just mentioned a few minutes ago that you want to maintain your, I think it's gross profit margin. I think that's where component parts go into in an accounting perspective. I'm just trying to rack my brain, accounting 101. But I guess my point is, what are you seeing in as far as component price pressures are concerned? So whether that's this rise, this pickup in lithium prices, batteries, memory chips, how are you feeling that specifically as a company? And whether or not you're going to pass it on to your consumers?
Yes, the components, some cost has been increased in the recent months. And I would consider this as a normal business cycle. In our business, automobile, it's a very long chain, complicated, industry. So any particular cost increase will be fitted into the system. It will be reflected to some degrees as a part of the whole ecosystems. So we expect the whole system will absorb it as an ordinary business cycle, and then cost increases. We also strive to reduce our cost by our own R&D, by supply chain management, by innovation, by our volume growth. So ultimately, we will be able to, navigate through all of this. So whether or not to pass the cost down to the consumers, not to a large degree, because as I said, there are many links and aspects of the business. So things are evolving. There are many other cost items. That's cost reduction. So ultimately, we'll have quite a stable price levels this year, while we can achieve, margins, achieve our growth.
So, Michael, just to confirm, do you plan to hike prices on your vehicles at all?
We don't have any plan to hike or to change the price systems. Our price systems has been very steady based on our series and platforms of cars. We have no significant change in price systems.
And when it comes to shortage of chips, I know you acknowledged this in the earnings call last night, but you were talking about further enhancing in-house development. You've just acknowledged around R&D what can be done in-house production as well. But if you were to look at memory chips in particular, or chips generally for the auto sector, how many moving forward do you want to manufacture yourself, and how much are you looking to acquire from other companies? What would be the breakdown in terms of percentage?
Right, the chips have not been short in supply in our case. It's been steady. You hear some cost increases in memories or other, basic materials. And also in our case, we buy the chips from the, mature suppliers who have relationships with the suppliers. So far, it has been very steady. We don't expect any supply issues on the chips.
So then when it comes to issues around raw materials. What's the biggest challenge that's facing your business today? Where are you seeing the biggest constraints, and what's concerning you the most?
In the cost, our concern is the overall cost structure of the entire vehicle, including all components, all aspects. You mentioned some memory, some cost increase in certain components. That is the normal business that we need to manage. We're not too concerned. For say one particular component's price increase, we'll deal with it. We'll find ways. We'll do the cost reduction in other places. And also, the most fundamental thing that works for us is we're growing. As we grow our scale, and a lot of these cost increases will be absorbed and digested along the way.
And just a last question on the gross profit margin, which you've already touched on, I think, creating a new high for the business last year at 14.5%. Given you do have those cost pressures in place, but you are, of course, expanding the lineup and can probably lock in greater economies of scale, do you see that moving higher in 2026, and what's your target?
Our near-term target for the gross margin is around 15% level, because our products are positioned as a good value, affordable, good products. So we want to reward the customers with some of our scale and the cost savings. So in the short term, in the short to medium terms, we'll keep the gross margin at this level, which is good for our market among the image and reputation among the consumers, but also can produce us with good profitability. As I mentioned earlier, in 2026, we expect to achieve a significant amount of net income. In 25, we turned net income positive, but in 26, it will be the first year we will have a significant amount of profit in billions of RMBs.
Yeah, Michael, I think the message is getting through to markets. Your stock is up 6% as we speak, and by my calculation, could be the biggest jump going back to August of last year. Michael, let's talk again soon. Net income substantially rising this year, plus, of course, sales and revenue growth. The co-president there of Zhejiang, Leapmotor Technology, Michael Wu there, unpacking the latest earnings and a message really to investors around the company and around managing the various components of costs. There we go. Okay, just a reminder of our new online feature. If you want to catch that full interview we just did with Leapmotor or others we might have done over the last hours or so on the Bloomberg Video Hub, subscribers can explore live streaming, news, interviews, and Bloomberg TV shows, documentaries, report analysis, and much more. Check it out, bloomberg.com/videos. Right, we'll get you a full rundown of markets just ahead. This is Bloomberg.
It's 11:29 a.m. in Tokyo this morning. Japanese markets just about to go into their lunch break. It's an interesting story because we actually are seeing the tech-heavy indexes in Japan, in Korea and Taiwan, very much moving to the upside today. In Japan, though, it's looking a little bit more muted. Yeah, it is. The volumes are not there, I think, is one of the takeaways that we've been told. Apart from that, it's a big central bank week too, right? So while we're not expecting most to move, it's pregnant with possibility in as far as what the messaging will be around inflation, right? That's just a way of saying, watch the guidance. And you have a bond sale too, as well, coming through, right? Asia is looking like this. When you look across sectors, the Asia dollar index is also coming up to give you a sense of how currencies are trading. We'll get more on that in a moment. But as you can see, it's generally an up arrow story, and it's a nice color of almost all green, which kind of masks the hedging that's still going on underneath the hoods and the lack of volumes, which we've talked about at length already. S&P futures, in fact, just to sort of pour some cold water on the conversation, is we're looking at
0.2% to the downside.
I think just to reinforce what we were just saying there around tech that's leading the gains today, I mean, you can see it very clear there, up more than 2%, the gauge 2.2% for the IT index. So as Lian Ting too was talking to us at the top of the hour, it's not just optimism around the Nvidia GTC event, very strong sales target into 2027, revenue they're looking at of around $1 trillion. You've also got some key earnings that are coming up this week that, you know, optimism around China tech specifically. We're seeing that big gain for the Hang Seng Tech Index, for instance, but Alibaba and Tencent that are due to report their numbers.
Yes, I'm looking underneath the hood of that specific sub-index, which, as Bell is pointing out, right, 2.2% to the upside. So you're getting Samsung and TSMC leading that on as far as points basis is concerned. Xiaomi is actually not far behind, and that is a stock, of course, that really led to the downside as far as the pull into the bear market on Hang Seng Tech. It's now leading the bounce today. It's up 3.5% shares of Xiaomi. I'm looking for Tencent and Alibaba not showing up in your top 10, but I guess that will feature really more and more as we make our way closer to earnings in the next few days or so. But that's just to say, lots to watch and many, many angles to the tech space here in the Asia Pacific. It's not an exclusive conversation around the Nvidia story and that supply chain is concerned. Okay, the other thing we want to point out is inflation, fuel, EMFX, net importer, how big your current account is, how much the currency is adjusting to an implicit stress on the current account. In the Philippine peso is a very good example of that. In fact, I think you had the BSP, the central bank coming in, being active in the market as that currency approached the 60 handle. And I think that's really a conversation. I mean, lots of conversations are coming up across Manila. Haslinda, of course, is there leading our coverage there with many policymakers and business leaders. So expect that to feature more prominently the Philippines in the next few hours or so. Indonesia is interesting because that is also very near a record low on the currency front. So we're really feeling the stress across these net energy importing currencies are concerned here.
Yeah, certainly the ones that are really more vulnerable, I guess. But it's not just oil that's been hit hard by the war in Iran. Bahrain has also cut output of the world's top aluminium smelter. Zinc shipments from Iran have been affected. Helium supplies, I mean, we're talking about helium supplies for the semiconductor industry, but from Qatar also at risk. The price of tungsten has surged. That's a key metal, actually, that's used in military equipment, but very important for manufacturing weapons. Also a looming shortage in the petroleum byproduct. That's naphtha that's been used in plastic manufacturing. On that point, actually.
Yeah, in fact, we heard earlier from the South Korean Finance Ministry, which says it is considering export controls on naphtha amidst this uncertainty over, when they'll be able to get some more supplies from the Middle East. Let's bring in our team to get into all these various angles and strands to the story. Let's bring in out of Tokyo our Bloomberg equities reporter, Alice French, to discuss the impact on Japanese plastics manufacturers. And we also have our senior industry analyst out of Bloomberg Intelligence, Masahiro Wakasugi, who covers Asian chip makers for us. Alice, let me start with you. Talk to us about the plastics angle here.
Yeah, I mean, so this is all about naphtha, right? And the fact that it's becoming increasingly difficult to get hold of it as the war continues in the Middle East. Now, essentially, it's sort of a derivative of crude oil. You get it from refining crude, and it's used in, pretty much any plastic product that you can sort of imagine. So, lunch boxes, plastic bottles, right through to sort of electronics and even car parts too. And Japan is looking particularly exposed, South Korea as well. They get a huge proportion of their imports from the Middle East. Japan as well has very limited stockpiles of this stuff, right? So only about 20 days worth of reserves of naphtha compared to over 200 days worth of crude oil. And we're already seeing this play out in some parts of the equity market. Some food container makers, their stocks have really been plunging in the past couple of weeks. And I think this is one of those issues where we're really starting to already see it play out sort of in real life, right? I think the crude oil price spike can feel a little bit abstract, but this is something that will start to feel sort of really close, I think, in the next few weeks and maybe even months.
Yeah, and I think it's that question as well as you go downstream. What are the sectors or the individual businesses that are going to be bearing the brunt of this? It's really seems very widespread, actually.
Absolutely. I mean, just yesterday we heard that Shin-Etsu Chemical here in Japan is going to be raising prices of PVC, partly because of this naphtha shortage. Of course, the petrochemical firms are really, at the forefront of this, and we've seen several companies over the past couple of days announcing that they will be cutting output at their plants. But yeah, further downstream, as you say, of course, pretty much anyone that makes plastic, so that it spreads to things like tech, it could spread to things like autos. I think consumer. We know here in Japan, of course, people love their bento boxes. We love the plastic bottles from the vending machines too. So I think consumers will start to feel this soon with higher prices. But the question really becomes, when we can't get hold of it anymore, what do we use as an alternative, right? The US does use ethane, but very few plants here in Japan are sort of set up to use that. So it could end up becoming, I think, a huge kind of chink in the supply chain.
Even that plastic that feels to me like a Rubik's Cube that you're trying to disentangle when you're trying to get an onigiri, which I guess to the point you're just making. There's a lot of plastic that goes into the packaging in Japan. Alice, another question for you. How else is this going to play out in Japanese markets? What else should we be paying attention to?
Well, I mean, look, if we look at the market today, we're actually having an up day and shipping companies are really strong, right? Of course, higher container rates because of those disruptions in the Strait of Hormuz have really been helping the shipping companies. Energy firms, too, have been seeing some boost. We've got the trading companies up again today because of higher energy prices. So there are those bright spots there. But I think, we have been seeing some caution playing out in the tech space. Of course, those AI and chip names had been bought up a lot sort of in the first couple of months of the year. We know that, of course, helium is also being impacted by this war and that could weigh on chip supply. And as we move into this, bilateral meeting with Takaichi and Trump later this week, there's a lot of caution moving into that. Will Japan end up sending ships to the region or not? That's a big question. That could be a tailwind for defense stocks. So we'll have to see how things play out.
Masahiro, let's bring you in here because, we've been trying to sort of calculate the risk for the semiconductor sector in particular, and trying also to understand, which, I guess there's many different parts of the supply chain that are based in Asia. You've got sort of the equipment makers, materials in Japan, and TSMC, of course, more focused on the foundries, and then you've got the likes of SK Hynix, Samsung as well. How exposed do you think the Korean names are looking right now?
Yes, I think that the company, the memory chip makers in South Korea, all, chip makers have to use some kind of gases, imported from the Middle East, originally from, Middle East. So, some companies may have to be prepared for some cost hikes. But in terms of the impact of the operating margin, we calculated that probably even though the cost hike could be something like twice and 100% increase, even in that case, the impact on the operating margin could be just 10% point because the cost composition is pretty much low, about 10% of total revenue. So in the case of the cost hikes, the memory chip maker could absorb. But if we see that some kind of the maybe operation of the factories are halted, in that case the impact could be quite large.
Yeah, and I think if there are any two companies globally that I think have pricing power, it's probably these two that can pass that on. Masahiro, and that then goes into the other story which we're talking about, which is the Nvidia event and their push into agentic AI. What have you penciled in as the potential upside as far as SK Hynix and Samsung revenues are concerned?
Yes, we had a quite bright story from Nvidia, and actually, their revenue target, $1 trillion is good for the memory chip companies. So revenue growth for Nvidia means the revenue growth for the SK Hynix and Samsung Electronics. And Nvidia is focusing now the demand shift from AI training to AI inference and also agentic, which means that the demand for the not only HBM but beyond HBM for the conventional conventional DRAM and also NAND flash memory, this demand will increase going forward. So that should be really good, not only for SK Hynix, which is really good for the HBM, but Samsung Electronics is really good at conventional DRAM as well as NAND flash memory. And more importantly, SK Hynix has a subsidiary of Solidigm in the US, and I think that these two companies as a group can maybe benefit from this kind of AI inference or agentic revolution going forward.
I wonder as well if you can comment on Samsung's debut at the event, because they did actually show for the first time this new HBM4E chip and also unveiled some new packaging technology. This is hybrid copper bonding in particular. How important is that for the company, do you think? And I guess where does it sit within the broader industry?
Yes, Samsung seems to be gaining its presence in the HBM market, and it was a bit lagging behind. But I think that Samsung Electronics overhauled its production system for the HBM product. So I think that the company could be the second supplier for the upcoming HBM4. And if we go to the HBM4E, the spec will be a bit more, a bit tighter going forward. And in that case, Samsung's new technology like hybrid bonding could help it gain some market share in the HBM market.
Team, thank you. Masahiro Wakasugi there out of Bloomberg Intelligence. Alice French, our reporter, of course, in Tokyo for us. Thank you also, Alice, for sticking around a few more minutes. I do recommend, of course, our viewers to do check out Alice's story today. The shortage of this NAFTA threatens the supply chain chaos in Japan. I'll look at markets very briefly. We'll take a short break, and we'll be back in a couple of minutes. This is Bloomberg.
All right, so it's actually a really busy week of central bank meetings. You've got the RBA coming up first today, but through the week you've got Bank Indonesia we've been talking about. You've got the Fed, of course, all important, BOJ, BOE, ECB, Taiwan. It's jam-packed essentially, but I think the RBA is going to be the first, of course, to deliver a decision since the war in Iran began. So that is going to be really closely tracked, giving us sort of, I guess, an early gauge of how policymakers are thinking about potential stagflationary impacts. But really, out of all the economists that we surveyed, the majority are expecting a hike. So let's talk about why exactly we're seeing that happening, because, of course, the RBA has sort of been caught wrong-footed both on inflation coming into the target and then, again, moving out of it, it seems.
Yeah, let's get the context here. So most think they will. There's a decent-sized minority think that the wise thing to do is be patient and hold. Swati Pandey is with us, our Asia-Pacific economic reporter is with us out of Sydney. Give us a preview on what the important sort of nuances are here.
Yes, the RBA is, like you said, widely expected to raise interest rates today because inflation was already a problem in Australia even before the war began. In February, when the RBA released its macroeconomic forecast, it had predicted inflation would peak at 4.2%. Now, remember, their target is 2 to 3%. So 4.2% was already high. And now increasingly economists are saying that with oil prices going up, that peak could hit 5% or even more. So with inflation expectations, the fears that inflation expectations could become unanchored if the RBA sat on its hand, it is looking really likely that the RBA would deliver a back-to-back hike today. The job market in Australia is also pretty tight, so unemployment is quite low, and the RBA has repeatedly said that demand is in excess of the economy's capacity to supply. So overall, even before the war began, it did look like an economy that was running hot and inflation was already high. The question is if the RBA would have still delivered a hike if the war hadn't happened.
Can you share some details and maybe some context for people that are outside of Australia? Do you think that there's a perception that the RBA has mismanaged the situation, or do you think that the way that the economy has responded to the different moves on rates has caught everyone by surprise?
That's right. So when the inflation outbreak happened after COVID lockdowns, Australia was one of those few central banks, or maybe the only central bank, which increased interest rates slower than its counterparts and also did not take interest rates as high as others did. And it was still able to bring inflation down. But inflation did not really come inside the midpoint of did not hit the midpoint of its target band. And even when that didn't happen, the RBA started cutting. Again, it did not cut as much as others did, and it was very slow and cautious on the way up, and it was very slow and cautious on the way down. Now, the RBA strategy was of what it says narrow path, which was preserving labor market gains while bringing inflation down. We asked the governor, Michelle Bullock, after the February rate hike if she considers the strategy to be fine, to be still valid, and she expressed confidence in that strategy, and she said they don't want to bring volatility in the economy, and the fact that the labor market remains tight, a lot of people are still employed, employment growth is decent in the country. All of those reasons are why they think the strategy is fine, and like yesterday, Westpac, which is one of Australia's biggest banks, their CEO said that the economy can withstand 2 more interest rate hikes. So it probably shows that the economy is in a good position with this strategy that the RBA adopted.
Swati Pandey, thank you so much. Ahead of the RBA in about an hour and a half from now in Sydney for us. The other one we're talking about is, again, the energy price inflation showing up elsewhere in the region. In the case of the Philippines, when you look at it from the perspective of buyers who are having to use a currency that is near the weakest on record, buying oil that is above $100, you effectively get a price that is near records anyway. And we're getting from the deputy governor of the central bank speaking right now that they are talking and looking at the spillover effects of oil prices. We did get the governor yesterday saying that they were actually intervening in the markets when the peso was nearing that 60 handle.
Yeah, no, let's actually take a look at it. Let's take a look at the impact of the Iran war, because it's also, as you said, looming large over the InvestPH summit or Philippines summit that opens today in Manila. Our insight anchor, Haslinder, is at the event and joins us now. So this is going to be, of course, I would say, pretty much factoring into every conversation you're going to be having on the ground today.
Well, that's right, Belle. As much as we're keeping an eye on the RBA, we're also keeping an eye on a BSP. As Dave mentioned, we had the BSP intervening, propping up the currency as it headed towards that psychological level of 60 per US dollar. The thing is, some expecting the currency to still breach 60 if oil prices continue to hover at $100 a barrel. Remember that we heard from the BSP governor himself saying that if oil does reach 100 and stays there, it could prompt a tightening policy. That is pivotal, and that is what we're watching for. The other thing about the Iran war is the implications on remittances. We have millions of Filipinos working in the Middle East, the likes of the UAE, as well as Saudi Arabia and Dubai. They send home 600 million pesos every year. That is about 8 to 10% of GDP, 25% of inflows, crucial for households in the country, crucial for consumption, crucial for growth. So those are the factors that we're watching out for. So in our conversations today, we'll be asking the questions on, measures that could mitigate the impact from high oil prices, that could help the Philippines revive its economy. We'll be speaking to, of course, the finance secretary of the country, Frederick Goh. This is his first interview since he took over that position back in October. We'll ask him whether or not the BSP needs to be even more aggressive in protecting the currency? Might there be an off-cycle meeting that could help prop up the currency? We're also speaking to the largest conglomerate here in the country. We're talking about SM Investments, the Vice Chair, Tessie C. Koson, will be joining us. Of course, this is a company which a lot of interest, including in retail, in banking, in property. We'll ask her if her businesses are getting impacted by the Iran war, and we'll be speaking to the boss of the Philippine Stock Exchange to get his take on how he can prevent that foreign outflows, which we have been seeing for a very long time. Plenty more ahead, of course, coming up in our meaningful conversations, hopefully, on Insight for the next 2 hours. Dave?
Oh, no doubt they will be. Haz, thank you so much. We'll be back with Haz in a couple of minutes here. Look at markets across the region. We'll take a short break. This is Bloomberg. Right, rally across Chinese tech names. Alibaba leading some of the gains right now, 3% to the upside, plus the other bigger movers across your screens. Meituan is also catching quite a strong bid. Tech stocks in focus, chip stocks too across the region, including those in South Korea on the back of the Nvidia story, the tailwinds we're feeling from that part of the world. On top of this, we're counting down to a great decision.
Yeah, it's such a big week for central bank decisions, but the RBA is coming up ahead of the Fed, the ECB, the BOJ. I mean, there's a lot more, but really the big watch here is going to be how exactly policymakers are thinking about the possible stagflationary impact of higher energy prices. Most economists that we've surveyed are expecting a hike from the RBA, so we'll get that decision in just over half an hour from now. But that's it for the China Show. Insight with Haslinda Armin is next. Stay with us.